Minutes later, the second house came back to us and said, okay, here's what we're going to do, which is just like a complete shift now. Hello and welcome to YQL Real Talk, where we talk all things related to living in Lethbridge and the Lethbridge real estate market. My name is Kurtis Hawkins. I'm a realtor. Right here in Lethbridge is my beautiful wife, Chelsea, who is the producer of this podcast. And today we're talking about the dreaded interest rates and how they're affecting the Lethbridge real estate market. So as it stands, as of recording this video, the Bank of Canada interest rate is at 3.76. So if you're well qualified and you have a good credit, all that sort of thing, your mortgage should be right around 5%, give or take a little bit. The big question is, why are interest rates going up? And there's a ton of articles out there about this right now. Most of them are not really relevant to Lethbridge. And I'm assuming, depending on what city you're living in, if you're not from Lethbridge, it could be or could be not related to you as well, because most of these articles are directly related to the big centers like Toronto and Vancouver. Seems like that's all the media really cares about.
Definitely the headlines about the effects of these interest rates rising are centered around Vancouver and Toronto, but can you give the dummies explanation of why interest rates hikes are happening in the first place?
Well, as we know, there was a pandemic, and during the pandemic, the government was trying to spur on spending. So what they did was lower interest rates so that people saw low interest rates. They started borrowing money to upgrade their house, buy houses, sell houses. And it also helps out businesses make more money because they can it helps businesses spend more money because they can borrow at a lower percentage. So that spurs more investment. And at the time in 2020, the Bank of Canada came out and said, don't worry, interest rates are going to stay low. If you're a household, this is like almost an exact quote. If you're a household that's looking to make a big purchase, or you're a business that wants to invest, rest assured that interest rates will stay low into 2023. And here we are, rising interest rates. And the reason why they did that was because obviously it worked. They lowered the interest rate a crazy amount, below 2%. Like you could buy a house. If you bought a house earlier in the summer or last year, your mortgage rate was probably like under 2%, which is wild. Obviously, it was very attractive. A lot of people did that. A lot of people upgraded their houses and it just went crazy. And they also printed money at the same time. So inflation went up. So because everybody's spending money, there's only supply and demand plays into effect too. So there's only so many goods for obviously now bigger amount of dollars. So when there's no supply and lots of demand, prices start to go up. So now they're trying to cool that by having people slow down. They're literally trying to make us slow down spending money by rising interest rates and making it harder to spend money.
And I get it from the government standpoint. Inflation is an unfortunate thing that affects every Canadian across the board, right? When we see our gas prices increase, when we see our grocery prices increase. So I get why they don't want those numbers to get out of control, because we've seen it in our day-to-day lives, how much increased groceries affects our overall budget.
And that's not entirely the government's fault that gas prices are going up.
No.
But it all plays into effect. And are they raising interest rates to battle the cost of rising gas prices? Nope, that's not going to fix anything. But unfortunately, that's just where we're at right now. And if you were to ask my opinion on it, I do think in 2023, probably at the end of 2023, interest rates are going to come down a bit, but they're probably, unless there's another unfortunate world pandemic or a world something that affects the entire world that we need people to start spending money again, are interest rates going to get down to like that 1-2% mark? I don't think so. I'd imagine that around 5% is probably going to be the new normal.
So you said before, all these headlines that we're seeing, the real estate market is crashing because of these interest rates. They are driven a lot to do with big centers like Vancouver and Toronto. What's it like in Lethbridge?
Yeah, so I guess that's a good point to touch on is Toronto and Vancouver, their housing prices have almost doubled in the last 2 years, which is not sustainable. And obviously, if you're living out there, if you own a house, you're probably doing great and your house just doubled in value. And it's probably coming down by, right now they're saying it's going to come down by 20-25% in those big centers. So lots of people out there are crying about it, but whatever, you've already made your money. You can afford the 20% to come down. In Lethbridge over the pandemic, when those interest rates did go down, the activity in the market went crazy. There was more buys and more sells than ever, and prices did go up, but probably about 15% over the last 1 to 2 years, whereas it's nowhere near double that we saw in Vancouver. So prices, Lethbridge in general is very steady. So to see like a big spike like this, even though it was a very minimal spike, is unusual. But for the most part, like with Lethbridge being so steady, we didn't see a big spike, but you're also not going to see a big drop either. So now that interest rates are coming down, you're not seeing those big 25% decreases that you're seeing in these big centers, because our market didn't go up that much, so it doesn't have that much room to come down. And I do think that it's going to really flatten out, and the Lethbridge market is going to be the Lethbridge market. It's always steady.
I do think the sticker price for the cost of borrowing money when it comes to Vancouver versus Lethbridge is another good example of why housing prices aren't going to plummet in Lethbridge. When you're talking about going from a 2% interest rate to a 5% interest rate on $1 million house, we're talking about your mortgage payment. I looked it up. We're talking about your mortgage payment literally going from $3,000 to $4,600.
On a $300,000 house?
No, this would be on the average. So we talked about this in the last podcast. The average single detached house in Vancouver is about $1 million, 1.15. So your $1 million mortgage payment went from $3,300 to $4,600. So that's like an extra $1,300 a month. Meanwhile, the average house price in Lethbridge is $350,000. So when you go from that 2% to that 5%, you're only talking about an extra, I think, $600 as opposed to $1,600.
And I've heard a lot of people in Lethbridge say like, well, wait till your mortgage renews and you got to renew at a 6% interest rate. Because if you locked in at, let's say, a 2% and now your renewal's coming up, you got to lock in at 6%. Everyone's saying like, well, wait until you see what that's like when you got to fork up another $400 a month, which is a tough pill to swallow, especially with all this, with all these rising costs and rising interest rates and inflation. It does suck for a lot of families. Like that could be all your discretionary, basically. But what I keep saying to people is, with the amount of people that we've seen already move to Lethbridge with housing prices going crazy, I'm only run Realtor, and I've helped probably, 85 to 90% of the business I've done has been people moving to Lethbridge. So with interest rates still rising and the housing market slowing, lots of people are telling me that they think there's going to be less people moving to Lethbridge. But in my head and my very good educated guess, I hope I'm right, but I think that you're going to see even more people needing to sell in these big centers and move to places that are more affordable, because even if they bought a modest home in Vancouver at $800,000 and they have to renew, and now it's going to cost them another $1,000 a month, like that's even more difficult to get over than obviously $300. Like I don't know how you can't budget for that. That's crazy. That's a huge increase. It's another $12,000 a year. Like who's got another $12,000 just to put on their mortgage when gas costs $1, especially in Vancouver? Like your gas here is $1. What are we at? $1.60, which we think is expensive. I bet you out there right now, it's always around 30 cents more. So I bet you if it's not at $2, it's above $2 right now. Maybe $1.90. But literally everything's more expensive out there.
So we talked about the fact that the Lethbridge housing market is not going to see these big plummeting numbers that we see in the headlines, basically. But we're actually moving. We mentioned this again in the last episode. So we've sold our place. We've bought a new place. So as all of these market changes are happening, we're experiencing it in real time, not only as you as a realtor, but also as a buyer and seller of a house. And I think the big difference is that we saw it switch from a seller's market where you have all these competitive offers to a buyer's market.
Because interest rates did go crazy and they've kind of switched so fast, the market did change crazy fast. Like it was only maybe a month and a half where I would go into a house and say, with a client, and they'd like the house, they want to put an offer, and I'd have to call the agent and say, are there any offers? Yep, there's 4. And we'd be in competing offers right away, which is super stressful for the buyer. It's awesome for the seller. Super stressful for the seller or for the buyer. Now a month, 2 months later, it's completely switched, where I was just out with a client looking at houses on the west side, and there's this one street right now that has about 4 very similar houses, similar square footage. They're all got a garage, similar sized bedrooms. Everything's very similar. Like they're pretty, built in 2010s or whatever. Like all the specs are very different. They're off by like a couple different square feet. Layouts are a little bit different, but they're pretty much the same house. So we went into 3 of them. He had his eye on the first one. It was just a little bit over his budget. So we put an offer in and they're like, nope. Why does he think he's going to get this good of a deal? And we walked away. We said, Kate, well, he's kind of at the max of his budget. And so we just decided to walk away. We went to the second house that was more reasonably priced for him, put in the offer there. And then the first house came back to us and was like, okay, here's the deal we're going to do. So we said, oh, perfect. Well, now it's in with his budget. So he said, okay, sorry guys, on the second offer, we're going to go back to our first one because this was like his dream house. This is the one he actually wanted. I apologize for putting in this offer, but these guys came back to us. We can't say no. 2 minutes later, the second house came back to us and said, okay, here's what we're going to do, which is just like a complete shift. Now it's like the buyers are totally in the driver's seat right now. I mean, not totally. This is a pretty unique situation. This isn't going to happen every time you buy a house right now. It was just both of these houses were just happened to be like in the perfect scenario where this one's been on the market for a while. These guys already have their eye on a place they want to buy. So it worked out. But in the summer, there was no way you would get this. Like you'd have to go in both of these houses and you're writing an offer that day and you had no time to think. So it is a lot less stressful for buyers right now, which is super nice. But for us, because we're moving, being a realtor, people think, oh, you're probably timing the market perfectly. But in my opinion, that's just not how life works. If everybody could time the market, if every realtor could time the market, every realtor would be loaded. That's not how it works. Had we known that we were going to move, right now, I would have loved to list it last year, but we weren't in the position to. We weren't ready to move. Like this was just an opportunity that came up. So we took it when we can. And we found the house that we wanted and it was easier for us to get into it. And luckily enough, our house sold quickly. So we didn't have to go through that stress. But we are selling another house right now and we're having troubles with that one. And that's just the way the market is. But we're prepared for it and we know what we need to do to get it sold. So
it's the beginning of November right now. We'll be it'll be mid-November before we know it. And is this not typically a slower time? I know from like a personal standpoint, we just had a massive dump of snow. This is the last time that I want to move.
Yeah, lots of people do want to get in. If they're buying a house now, they want to get in right before Christmas so they can have Christmas in their new house. But if you're looking at like the graph of Lethbridge, it's basically these winter months are down here in terms of volume of sales. And then as it ramps up to the summer, June, July, August, it kind of peaks and then it comes back down back into the winter months again. And that's just like, you could literally every year it does the same thing. Last year it was with rising interest or with, not rising interest rates, with the interest rates still low and there was super low inventory. That whole shift that when you see like the peak in July, August was like usually over here, it just slid back a little bit. And like May, June, July was, or May and June was super busy, but it's basically the same thing every year. Be interesting to see what happens this year, but it's still going to be the same type of curve in my opinion. So that's another reason why it's a little bit tougher to sell right now in the winter is just because there's a lot less deals going around. There's less buys and less sells.
But if you were a buyer now, would this not be extra ideal? If the house that you wanted, like your dream house was on the market, that maybe not as many people are thinking about buying.
I think for the most part, the questions I get asked all the time is, well, should I buy a house now? No matter if it's the fall or the summer or whatever, should I buy a house now or should I wait until prices come down? And if you listen to those numbers that we just went over, if you didn't, I don't know, Chelsea, if you did a comparison, but did you do one at what, like a $300,000 mortgage was? And if you waited a couple months and your mortgage was at $325,000?
I did. So I see this on TikTok all the time where people are saying, here I am sitting waiting for the housing market to crash. And the unfortunate balancing part is that for a $350,000 house, and again, we're using this number frequently because this is the average house price in Lethbridge. A $350,000 house at a 5% interest rate means that your payment is about $2,000 a month. That's only with 5% down, but anyhow, is only $2,000. Is $2,000 a month. Meanwhile, if the interest rates were back at 2%, you could have gotten into a $500,000 house and your payment would have been the same.
Is it really that dramatic?
It is literally that dramatic. I used Rates Hub to calculate all these, and
Okay.
I just put in a custom interest rate of 5% or 2%. It is literally that dramatic. The things that change is the amount that you'd have to put down as a down payment, right?
Yeah.
5% on $500,000 is much more than $350.
But that's the thing is if you're waiting for, if you're a first time home buyer, you have your down payment and you're waiting for the market to crash, and you know, it's not going to happen in Lethbridge. First of all, maybe if you timed it right, you'll save an extra 5,000, maybe 10,000 if you're super lucky. But if you waited, you know, if you have to wait another month for that to happen and there's another interest rate hike that you're not logged into, or maybe your interest rate expired, then you're going to end up paying more per month if your interest rate went up and you still saved that $10,000. Does that make sense? Mm-hmm. So to me, timing the market is pretty useless. You just have to be aware of what the market's doing when you're entering it and know all the pros and cons. And if you're ready to move, then you're ready to move. Like there's always a way around it. If someone ever asked me in Lethbridge, might be different in other cities, but in Lethbridge, if somebody ever asked me, should I keep renting or should I buy? You need to buy like right now. Because if you're renting, surprise, surprise, you're paying a mortgage already. It's just, you don't own that mortgage.
So I pulled up some historical numbers when it comes to interest rates. And again, speaking from firsthand experience, when we first bought our first house 7 years ago, I think interest rates were about 3.5%, I think is the first interest rate that we got into. And I remember our realtor saying, this was
before I had my real estate license.
Yes. This is so low. Like these are absolutely unheard of. So we never expected interest rates to go lower than this. And
every time we bought two houses since then, and we bought the second house, we were like, wow, we even got a cheaper rate. Yeah. Wow, we even got a cheaper rate. Yeah. And that didn't last forever, obviously.
No, I think we renewed one of our mortgages recently and we saw it go up a bit, but
yeah. And now with this one, when we're moving out of this house, we're going from I think it's 1.98, and now we're going to 5, basically. Yeah. So we know exactly what it's like.
Yeah. Also, there were a few articles that we mentioned or that I used as research in order to get some of these like numbers and stats for you guys. So I will be sure to leave all of the articles related to this podcast in the show notes below or in the YouTube video description. But one of the articles I was reading talks about the historical rates for mortgages, and the average rate from 1971 to today is a 7.76 interest rate. So
we're still below average. We're still below the average interest rate in the last 30 years. But like Justin Myers, the broker that I work for, he was saying people are goldfish. And like one of his things he was saying, people are goldfish. So they only remember what happened last year. And last year interest rates were at 1. So now that they're at 5, it's heartbreaking. And it sucks because if you are getting approved, you can't get approved for as much. But that's life. Like, what are you supposed to do?
No. I don't. The last thing I want to do is downplay the effects of rising interest rates. It does affect people, and it's affected our monthly budget when we're moving into this new place. Like there's definitely a repercussion, but this is a life lesson that you teach me on a regular basis is why are you stressing about things that you can't
control,
that we can't control. So I can't control what the government's going to do, but I can control what our monthly budget looks like and what readjustments I need to make. So that's what I need to worry about and work on. We've actually seen it again in our own experience where, again, we're working on selling another property right now, and there has been people that have been very interested. They were approved.
They said last year, what they were telling me was that they were approved last year for, I think they said 300 or something, and then now they went to get pre-approved and they couldn't afford the house they were selling, which was close to 300. It was still significantly under 300, but yeah, they just couldn't get approved for, I think it was like, I don't know, half of that or something like that. I can't remember the exact numbers, but it was a dramatic shift from what they were expecting to hear.
Which is heartbreaking for them and heartbreaking for us, for sure. I think the other thing about interest rates is the stress test. We've heard this quite a few times, is that they introduced the stress test, which means that you now not have to qualify for your mortgage at what the current interest rate is, but you have to be able to qualify at a higher interest rate. And I think that is...
I think it's 2% higher.
That's indicative that this was going to happen years ago, that it was...
Yeah, they're preparing you for interest rates to go up, and they don't want you to buy a house that you can't afford if the interest rate does go up, which is a good thing because it does save you if you are budgeting and you're already at your max and there is an interest rate hike and then you can't afford it when there is one. But it also, again, with every interest rate, it makes it harder because now you're not getting approved at that 5%. You're getting approved at if it were at 7%. So I guess in conclusion of this podcast, my advice to you would be not to time out the market because it's definitely not worth it. It might end up costing you more month to month in the long term. You know, you might save $5,000 off of the list price, but if your mortgage rate expires or you have to get approved at a new interest rate, it could even knock you out of the house that you were looking at based on what we just said, right? So, especially for first-time home buyers, like, to me, there's no point trying to time the market. Nobody can time it. It's like stock market. You buy a house for the long term, so you buy it now in hopes to accrue some equity and build up equity rather than renting and literally pouring your money into somebody else's mortgage. You're better off putting that money into a house at whatever interest rate it's at and think about your long-term future and don't think about saving $5,000 on your mortgage next month. Of course, everybody wants a deal. But at the end of the day, it's still more important just to get the house that you're happy with and set yourself up for long-term success. So that's it for this podcast. Thank you guys so much for listening to another episode of YQL Real Talk, episode 2. If you guys want to stick around for episode 3, be sure to follow us on whatever podcast thing you're listening on, Spotify or whatever. We're also posting this on YouTube, as well as on my YouTube channel. There are a ton of home tours and more specific informational based videos that I drill specifically into about Lethbridge. So if you're from Lethbridge, they're probably pretty helpful if you've never heard this stuff before, but especially if you're from outside of Lethbridge, they've been really helpful for people. So be sure to check those out as well. And this is a brand new podcast. This is only our second episode. So if you are so inclined and you could leave a review or a rating on your podcast place of choice, it would be greatly appreciated. And we'll see you guys on the next one. Bye.